Manish, to the point as to whether or not valuation should be a metrics also or not to try and judge some of these, household names, if I can call them, Hyundai as well as Swiggy, Bose. I mean, because, history has told you that there hasn't been a better time than the IPO if you got lucky and got allocations, because those levels don't ever come back. I mean, look at a trend, for instance, this morning. I mean, today you've got a brokerage putting the price targets at 92.50. I mean, before you know it, Trent is going to be a 10,000 rupees stock. So is valuation really a metric in this market that you should be looking at?
So valuation, Aisha, will always remain a metric to, carefully analyze. And, over the last 3 decades that I've been there in the Indian markets, I found out one thing is that you attribute PEG valuation metrics. If, let's say, some company is growing at 100% and the PE multiple is 100, the PEG is 1. As long as the PEG multiples on structural businesses is less than 3, you could have some scope of appreciation provided the growth remains there. But if you have some company or some industry broadly growing at 15-20% and you have a valuation multiple of 75-80, it's very difficult to sustain. And if the P multiples were to contract, you're going to lose money even if the company grows. And a 5 PEG multiple broadly in Indian markets for the medium to long term doesn't sustain. So some of these names which could be coming out for IPOs, of course, we have to analyze how they would be faring in terms of growth for the next 5 to 10 years, and then take a call whether the valuation, even let's say 2 years out, are conducive when it comes to making money in the next 2 to 3 years. Otherwise, everything is just momentum, and that's basically a lot of risk that you're dealing with. And I don't think it makes sense to really pile into something which is just sheer momentum, because it's bound to have pitfalls. And there could be a lot of time correction, price correction, even though businesses are good, companies are good, managements are good, but I mean, there is no better thing than to really take a call on valuation when it comes to allocation plans capital. I mean, it's a must. And more than 3 price to earnings growth generally doesn't make you money in Indian markets, is what I found out. And if growth falters, looking at some serious price risk.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.